So Eli Lilly's stock, LLY, it's been on an absolute tear, right? But the big question is, does it still have gas in the tank? Well, today we're going to unpack a really deep technical analysis to figure out what the charts are actually telling us about where this pharma giant might be headed next. Let's dive right in.
So yeah, what is the real story here? After a run-up like that, you gotta wonder, is LLU still a buy, or is it maybe time to cash in your chips? We're gonna dig into the key data points from this report to see if we can find some answers. Okay, first things first. Let's zoom out and look at the big picture. What's the overall trend for LLY? Like right now?
And the verdict is in. Right off the bat, the trend is bullish. Plain and simple. Now, what does that mean? It means the overall feeling, the direction. It's positive. The stock is pointed upwards, even with a few bumps in the road lately.
To really get this, we've got to look at the journey it's been on. It all kind of kicked off back in early September. The stock hit a low of around $727, and that's our starting line for this recent surge.
And from that starting point, whoa, the stock just went on this incredible climb, hitting a peak of almost $864 in early October. Think about that. That's a huge move in just over a month.
And that brings us to the price mentioned in the report we're looking at, $825.45. So, after hitting that peak, the stock did pull back a bit. It's now in what the pros call a consolidation phase. You can almost think of it as the stock's just catching its breath, you know? It's trading sideways, kind of chilling in a stable range before it decides on its next big move. All right, so bullish trend? That sounds great, but where's the proof? What's the evidence? Well, that's what we're getting into now. We're going to look at the hard data, price, volume, and some key averages that really build this case. Okay, I know this looks like a wall of numbers, but just hang with me. We're going to focus on one key detail. See that column on the far right, the one labeled volume? Now, track your eyes down to October 17th. You'll see the price actually dropped that day, but look at the volume. It spiked to nearly 4 million shares. This is what analysts call an elevated volume pullback, and it's a really big deal. It tells you that even on a down day, there was a ton of trading going on, which often means there's some serious underlying interest in the stock.
Now, another huge piece of the puzzle here is something called moving averages. So what in the world are those? Well, in a nutshell, they just smooth out all the chaotic day-to-day price jumps and drops to show you the real underlying trend. The analogy in the slide is perfect. Think of it as the stock's average flight path over a certain time, whether that's just 5 days or a whole 200 days.
And this right here, this is why that whole flight path thing matters so much. See, the report points out that LY's current price is trading above most of its key moving averages. When a stock's price is flying higher than its own average flight path, that is a classic, textbook sign of strength. It's a huge checkmark for the bullish case.
All right, now it's time for the really fun stuff. We're about to dive into some of the more technical-sounding indicators from the report, but don't worry, I promise we'll break them all down in plain, simple English.
First on the list is something called the MACD. Now, the name sounds super complicated, moving average, convergence, divergence, but its job is actually pretty simple. It's a momentum indicator. It just helps analysts see if a trend is gaining steam or losing it. And a positive MACD, which we're about to see, is basically a big thumbs up. It's a bullish signal.
And here it is, the actual data for LLY. That main MACD line is sitting pretty at a positive 13.69, which the report flags as bullish. But look at that second line, the MACD histogram. That's negative, and that tells a slightly different story. It suggests that while the big picture momentum is positive, there's been some short-term negative pressure lately. And hey, that lines up perfectly with that whole consolidation phase we were just talking about.
Okay, next up, we've got the RSI, which stands for Relative Strength Index. You can think of this one like a speedometer for the stock price. It measures how fast and how much the price is moving. And its main job is to flash a warning sign if a stock is getting overbought, meaning it rocketed up way too fast, or oversold, meaning it dropped too quickly. So you see, it's kind of like a balancing act. On one side of the scale, you've got these strong bullish signals like the MACD we just saw. But on the other side, you've got weaker or more neutral signals like the RSI. And this mix, this is exactly what the report calls bullish undertones. It's basically saying, yeah, the momentum is positive, but the stock isn't flying into dangerous, overbought territory. And that actually supports the idea of a healthy, sustainable trend. Okay, so we've looked at all this data. Now for the million-dollar question. Where does the stock go from here? Well, the analysis lays out 3 possible scenarios, and they all hinge on a couple of key price levels that you're definitely going to want to watch. Right, so here are the 3 potential paths forward. It's helpful to think of resistance as a ceiling the stock has to break through and support as a floor it needs to stay above. The bullish scenario happens if LLY smashes through that ceiling at 834.15. If it does, the next target could be 840. The bearish scenario, that's if it falls through the floor at 812.50. And the neutral case, well, that's if it just keeps bouncing around between that floor and ceiling, basically just moving sideways.
So after all that, this brings us to the final verdict. What's the ultimate takeaway from this whole deep dive into the numbers and charts?
And this quote from the conclusion really just sums it all up perfectly. The core message is this: the bullish trend is still very much alive. That sideways movement we've been seeing, it's just healthy consolidation. And it's all supported by positive momentum and signs of what's called accumulation, which is really just a fancy way of saying, like, even during this pause, it looks like the big money investors are still quietly buying up shares. So what's the practical advice here for investors? Well, the analysis suggests that if you're a short-term trader, any of these little dips or pullbacks might actually be buying opportunities. But for long-term investors, given that the stock is above its key averages and the overall trend is strong, the game plan might just be to hold on.
And finally, the report boils all of this complex analysis down into a single number, an overall technical score of 62.34. This basically serves as a final stamp of approval, indicating a solid positive sentiment and backing up the idea that this bullish trend has room to run.
So there you have it. The analysis lays out a really clear, data-driven case for a bullish trend in Eli Lilly stock. But, as we all know, the market is going to do what the market is going to do. These charts and indicators, they give us a roadmap, but the journey itself is never a sure thing. Which leaves us with the one question that always remains: what comes next?